at the right time.
Hello and welcome. You're watching Bloomberg Quint right here, and we've got the countdown at the start of the show. About 0.4% higher on the Nifty, 10,835 is what we've crossed. So the start of the week has been optimistic. Across the board, you're seeing gains. The banks are coming in strong this afternoon as well. 27,000 crossed on the Bank Nifty. We'll talk about all the internals of the market, but just quickly run you through the headlines. Indian markets extend gains as trade talk optimism stokes rally in Asia. Heavyweights like HDFC Bank and Infosys lead the gains. Real estate stocks surge in trade after the GST Council cuts tax on under construction projects from 12% to 5%, also cuts rates on affordable housing. State Bank of India denies planning to take Jet Airways to NCLT. RNFS entities cannot be classified as non-performing assets without the approval of the National Company Law Appellate Tribunal. Neeraj, good afternoon. Start with the week and an optimistic one, coming off from gains of about 0.5% that we left off with last week. So an encouraging start nonetheless. Yeah,
and the day has been good because we dipped down almost to breaking even. In fact, at a point of time, broke in the red as well and then stayed the 0.1%, 0.2% kind of a rally. Currently about 0.5%, so it's not a bad sign. And banks are leading the charge. The Nifty Bank is up 0.7%, 0.71%, 188 points. So really good show put up by the Nifty Bank, and that is propelling the index higher. Quick look at the mid cap and the small cap indices once, and maybe the market breadth before we move ahead. The breadth should be positive because it's over 0.5% for the small cap space, almost 0.7, 0.75%. The mid cap index about 0.5%, and the market breadth should be showing some positivity. So advance decline ratio in favor of the advances. Devin, I will speak all about it. Let me just get you up to speed with what's happening at the large cap arena, the heat map, and Adani Ports will be placed right down there. It's about 8% lower. So that stock continues to face the ire throughout the trading day today. No respite coming in for this one. Bharti Infra about 3% lower. BPCL a couple of percentage points lower. OMCs by and large have been off because crude is trading at the highest levels in calendar year 19 thus far. What's doing well though? Ultratech Cement 2.5, UPL, we just did an extensive piece on UPL today, and we'll get in Darshan a bit later on to talk about that too, as to what's clicking for UPL. That's doing okay, and IT is finding some support today. TCS, Infosys, HCL Tech, Wipro, in fact all of them trading in the green, and HDFC Bank giving some support as well. So banks, IT doing well. Difficult to falter when such a combination is active. But what about the broader end?
Broader end, and you have real estate and housing finance companies also pitching in this afternoon. So starting off first with the mid caps as well as the small caps, while the Nifty 50 is up about 0.5% in trade right now. You have them doing well too. So stocks like Brigade Enterprises, Ansal Properties, Godrej Properties are all up in trade today. Obviously not at the highest point of the day because they started off with a really big bang, but nonetheless all these stocks have already seen a run up in anticipation of the GST cut. So not much of a bigger impact once its announcement has come about. Other stocks in focus, GVK Power and Infrastructure on purchasing stake in the Mumbai airport. The stock's up about 9.5%. Motherson Sumeet is extremely well today, and on high volumes is up about 9.6%. And Jet Airways, a lot of news floating around. There was some news with regards to SBI taking Jet, which they have denied now that they were going to take them to the NCLT. But the stock is down about 2%. 2 additional aircrafts have been grounded for Jet Airways. So the stock under pressure. Sugar stocks continue their sweet run up. So today's session, yet another day where a lot of these sugar names are buzzing about in trade. Sri Lanka is up 10%, Bajaj Hindustan 8.5%, and an EID Parry along with the others is up about 5% in the session. Some other stocks on the back of heavy volumes. You've got Take Solutions, which is in double digits, and the stock has gained about 28 lakh shares on the back of 28 lakh shares, which is significantly higher than its last 20 days average. Magma FinCorp trades about 3.5 lakh shares. That's up about 8.8%. And Rain Industries, a performer from last week. So the stock has continuously been gaining steady ground. Today's session is up about 7.5%, trades about 17.8 lakh shares. But what's happening in the more liquid universe in the F&O space? Agam Vakil is joining in with more details. Agam, good afternoon.
Afternoon, 4th straight days of gains, albeit without much
considerable gains coming through, but today is perhaps an exception given at least 0.5% gains coming, and rollovers have picked up at around 20% on the first day of the expiry week. We have also seen a considerable pickup in your March open interest, as you can see on your screen, 5 million shares added out there. But that said, when it comes to the Nifty futures, and rather the Nifty banking futures, and once again, this is where there is a little more accumulation across OI for February as well as March, and again 18% as far as rollovers are concerned. Coming down to your India volatility index, that has risen well marginally at around 1.8%, as long as it's well within the range of 15.5 and 16. Traders are not as not worried about volatility in general, but that said, let's also take a look at some of your option premiums, and as one might expect, considering the Nifty has moved above the mark of 10,800, we are seeing a writing in the 10,800 put. Now, talking about stocks, of course, right at the top is Motherson Sumeet, 20% added in open interest, even as this underlying advances by nearly 10%. So there certainly is a lot of longs building into this particular stock. Next up, we also have Page Industries, which is actually seeing short covering in, well, it's February futures. This one is another one which has been volatile of late. And well, in terms of other stocks, Hemen is the one which is seeing fresh buying with a 12% increase in February open interest. And finally, on the losing end, we have Adani Ports, and that is where 20% has been added towards fresh shorts, even as the spot declines by 8.2%. So while we do have more gainers against losers, there are some which are certainly moving out and losing to a certain extent.
All right, Agam, thanks a lot for that. That's a quick F&O wrap out this afternoon, but let's keep it with what's been happening in the globe. U.S. President Donald Trump delayed his own deadline to increase tariffs on Chinese goods as his administration continues a months-long effort to persuade Beijing to make significant structural changes to its economy that have so far proved elusive. Anthony Simon, investment manager for emerging markets at Aberdeen Standard Investments, is joining us right now on the show. Thanks a lot for taking out the time, Anthony. What have you made out of these comments that have come in over the weekend? Clearly, it's kept the emerging markets very active.
Yeah, that's the case. I think it's clearly one of Trump's key policy priorities. He hasn't had a lot of wins over the past 12 months, and China is somewhere where he thinks he can get a deal, and where the noise over year to date has been extremely positive. Him pushing out this deadline is another tick box for EM, and I expect the market to rally quite strongly this morning.
What about what happens to the currency going forward? I mean, we've already seen what's been happening in China. The equity markets are extremely active, but what does it do for the bond market yields as well as the currency itself?
Yeah, the currency will probably be, I think, it's pretty stable from here. I think part of the deal will assume that renminbi doesn't appreciate too much against its major trade partners. The bond market, though, should see quite a big rally. It's been opening up to foreign investors quite rapidly over the last few months, and that should drive even more foreign interest into the domestic bond market, and yields should go lower, especially given that they are easing at the same time. Both monetary and fiscal policy is getting easier and looser, and again, that should mean bond yields start to come down.
Anthony, good morning to you. In anticipation of something positive happening, the yuan had already started inching up a little bit. Is that a relief for emerging market asset class watchers that a possible devaluation of the yuan, which would have spooked almost all asset classes, including equities, now seems to be out of the equation for the time being?
Yeah, I think so. Clearly, China's a big influence on emerging markets, not just in Asia, but for broader sentiment in general. Having that risk taken off the table, I think will continue what has been a really positive start of the year, both in debt and in currency markets. Certain EM currencies have sold off this month, but I think that will take a little bit of a wind off the steams and a little bit of stability come back. I'm talking about some of the more liquid part of the market, the South African rand, the Mexican peso, those countries should really benefit now from a stable one.
Because those markets have been beaten down so badly, Anthony, the South African rand, for example, or I'm presuming the bond markets out there too haven't performed the best. And now China, both equities and possibly debt, the concerns on that will be a lot lesser. With the presumption that Donald Trump and Xi Jinping do reach a conclusion on a trade agreement which is favorable for both nations. If that were to happen and if China were to open up for foreign institutional investors, both on equities and the debt side as well, does it mean it will happen at the cost of other paper from the other economies?
You know, I'm not sure about that. One of the key things that we're seeing at the moment is that a lot of emerging market countries have their own problems. It's not just a case of external risk. In South Africa, they're dealing with Eskom, their state-owned utility company, which has needed quite a large bailout. In Mexico, they're trying to deal with Pemex, again, another state-owned enterprise, which needs significant funding. You know, these issues won't go away, but you know, at least if the backdrop to risk is a little bit kinder, it might give these countries a little bit more time to get their house in order.
Moving forward, Anthony, what's going to be of prime importance that we're going to be watching out for from an emerging market perspective? It's going to be the growth data points that we're getting across the board, and not just China, or is it going to be the political uncertainty, or the for a country like India where the elections are upcoming? You know, so there are different aspects that we're watching out for different emerging markets.
Yeah, I think on the positive side, the economic outlook for emerging markets is extremely strong. The growth differential between developing countries and the developed world is widening and should continue to widen in the coming years. The inflationary outlook is very positive for EM, and that's allowing a lot of central banks to ease policy, as we've seen in India and we've seen in China, for example. But on the negative side, yes, the politics is extremely important. We had elections in Nigeria over the weekend. Again, we're awaiting results there. India, as you say, is coming up, and that could have a big effect on policy going forward. I think we're not expecting the same type of reforms, the amount of reforms in India going forward, given that BJP is likely to, lose a number of its seats. Already the budget that was announced earlier this month is much more, populist in nature, and I think that's a sign of things to come, especially if if they do win, and then their control of the legislature is less than it was for the past 4 years.
From a bond market investor at this point in time, which emerging market stacks up at the top of your list?
For us, our key positions at the moment are in Mexico and Brazil to a certain extent. In Mexico, we think that the central bank there has room to cut rates and ease policy. We're less concerned really about the effect that Pemex has on the sovereign, although I think for a certain degree the market is probably more concerned than we are. In Asia, we do like India. At the end of last year, we thought that the bond market was pricing in rate hikes when really the central bank was looking to cut rates. And so we've benefited a lot by the fall in bond yields there. And we think that come April's MPC meeting, RBI will likely cut again. And again, that will be positive, we think, for the rates market.
All right, Anthony, we'll leave it at that. Thanks so very much for joining in. Really appreciate you taking out the time.
Thank you very much.
That's Anthony Simon from Aberdeen talking about what is the global market scenario likely, at least from the macro end and the bond market perspective that we got from him. Markets for us, 0.5% higher on the Nifty, so 10,850. Good gains. We're at the highest point of the day, so no complaints there. Nifty Bank also comfortable above 27,000. In fact, making a quick dash towards 27,100. I want to quickly highlight some of the movers in the broader market space. We already highlighted a few themes where we chose real estate, housing finance companies, sugar as a pocket, all of those counters doing well. Aside from that, stocks are not doing well. You have Reliance Communications, which is down 7% in trade right now. Reliance Naval is down 3.5%. You've got JP Associates down 3.25%. Motilal Oswal is having a rough day today, so down about 3%. Reliance Power, JP Power, MTNL, Reliance Infra. So the ADAX stocks are the stocks that are right at the top of the losers list right now.
Yep, so that's the losers list. It's interesting, what's happened to IT today, up about a couple of percentage points. So those companies and Infosys, TCS, etc. are doing rather well for themselves. But the bigger point is a couple of industries or a couple of spaces which seem to be doing really well for themselves. And despite naysayers being there, sugar is really up and about. Balrampur Chini is now at 133. This would be multi-year highs, I would presume, at least 2-3 years if I'm not wrong. So really strong show by Balrampur. Sri Renuka Sugars has gained about 11%. I don't know what Dhampur is doing right now. Will come up on your screen. Sri Renuka Sugars is up about 12%. Dhampur another 12.5%, 243 and counting. So
Raj is up, EID Parry is up. Everything within the sugar pocket, is up. And then this has probably been the case since a month now.
Yeah,
just
that they're building onto the rally. That's the key thing. The rally is not getting sold off. There are buyers even at these elevated levels, which is actually a remarkable
The structural story probably is something that investors are buying into, and the fact that the big ethanol story combined with that, what's been happening with global production, combined with that, what the ISMA projection for our domestic owned supply coming off, which will aid prices. Add to that the MSP getting increased. So from every quarter, you've actually seen some positive news trickle in for sugar.
For sure. This space is doing really well for itself. What is not doing well? So actually, there's another space which is doing well too, but there is one pocket which is not doing well. So let's get in Sumeet as well as Nikki to talk about the larger names now. Sugar is the mid-sized pocket which is done well and in its focus. Let's talk about Adani Ports firstly. The stock is down about 8% in trade. The news is well known. Sumeet Sarkar is here to talk about what have brokerages made of it and what could the way ahead be for Adani Ports. Sumeet.
So firstly, if you see, Adani Ports will be acquiring the Adani Enterprises Agri arm, that is Adani Agri Logistics, through its wholly owned subsidiary, that is Adani Logistics Limited. Now, Adani Ports, that is the most profitable Adani Group company, will be paying close to 946 crore rupees for this acquisition and will separately take a debt of close to around 700 crore rupees on a net basis on its book. However, this is not much of a concern for the company, because if you see, the company had a significant cash on its book of close to 5,000 crore rupees as of September 30, 2018, and it had a lower leverage ratio, so that is not the main concern. Now, this deal is expected to complete by the end of financial year 2019 and is subject to regulatory approvals. Now, the main concern that comes in because of this deal is that this is a related party transaction, and despite this being a related party transaction, it will not require approval of minority shareholders, as it's being done through its wholly owned subsidiary, that is Adani Logistics Limited, and that is the main concern, and that is why the stock is down nearly 8% in trade today. Now, what does Adani Agri do? Adani Agri is India's largest modern agri storage infrastructure company with around 45% market share. It has agreements with with Food Corporation of India and other state-owned agencies to operate and project facilities, warehousing, and for transportation of food grains. Now, it has long-term contracts, that is nearly 20 to 30 years long-term contracts where there is a guaranteed off-take contracts to use on a pay basis, and the EBITDA margins coming in from this business is close to 70%. Now, if you see, in financial year 2018, the company had an annual revenue and EBITDA of close to 128 crore rupees and 92 crore rupees. It is expected to touch nearly 193 crore rupees and 143 crore rupees in the next 2 financial years, that is by financial year 2021. And the EBITDA margin also is expected to remain in the range of around 72 to 74% for this business.
All right, so the numbers are not looking all that bad, but what is the call that brokerages have taken on this particular deal?
Well, other than Citi, the other brokerages have maintained their stance on Adani Ports, but they have said that the acquisition is expensive given the fact, from a minority shareholder's point of view, given the fact that it is a related party transaction and the synergy realizations would take time. Now, for CLSA, if you say, they have maintained their buy rating with a target price of around 475. Now, it says that the funding is not a problem for this acquisition, as even post this acquisition, the company's leverage net, that is debt to equity, would be only 0.72 times. So that is not a concern, but more such transactions with Adani Ports could be a big concern for the company, given that this is one of a related party transaction that is happening in Adani Ports. Secondly, Citi, now they have downgraded the rating on the stock to neutral from buy and have cut the target price on Adani Ports around 385 from 500 rupees. Now they have downgraded the stock on this acquisition because they believe that the acquisition is expensive and raises questions on the capital allocation policies of the company. However, they have still kept a neutral rating on the stock because of its strong underlying operations and because of its reasonable valuations.
Okay, Sumeet, thanks very much for that. Adani Ports, one of the biggest losers on the index this afternoon. Now, moving on then to a pocket which is abuzz with excitement, and Morgan Stanley has turned bullish on metal stocks and believes that earnings will accelerate, led by domestic demand and price hikes, but downgrades non-ferrous companies, reflecting risk from commodity prices. Nikki Mirchadanish is joining us with more details of that report. Nikki.
Devina, before I could address the note, Nifty Metal Index for the 5th consecutive session today is moving higher. However, this time around, today's session, the uptick is not led by steel stocks, but then Morgan Stanley has come up with a report which is suggested about shifting preferences now to ferrous space as compared to non-ferrous, which is the steel sector, as compared to the other aluminium and coal India. What it has to specifically say about the steel sector is that steel companies' earnings are expected to accelerate, led by the domestic demand and the price hike. The parity, the demand prices, the domestic prices are now at a very marginal discount as compared to import parity, which is versus the long term, a discount of nearly 7% as compared to the import prices. Valuation, nevertheless, are very compelling, and they are trading at a discount as compared to their long-term averages. If you look at the ratings that the company has, that the brokerage has actually gone ahead and increased the rating for JSPL, JSW Steel and SAIL, and with that has also increased the target price. If you look at the potential upside, 21% is the highest potential upside that Morgan Stanley says for JSPL, and it sees the least amount of potential upside right now for JSW Steel. But at the same time, it has gone ahead and revised the pricing, revised the rating from underweight to equal weight for this counter. For non-ferrous sector, it says that the ratings right now reflect the earning risk from commodities and also the relative valuations, given that steel prices, or steel stocks rather, enjoy a better valuation. It has downgraded Hindalco rating as well as the target prices, says that the valuation right now reflect the impact of increased aluminium imports, and also sees a near-term risk coming in from its subsidiary, the U.S. subsidiary Novelis. Vedanta, it has maintained the rating, but then it has slashed the rating price mainly on account of risk from potential delays and higher costs in the ramp-up phase. And Coal India, it has maintained that rating out there, but has gone ahead and revised the target price. It says that the disappointment on volume growth currently is reflective on the type of underperformance of Coal India. Nevertheless, it says that at this given point of time, the net position of the company and the dividend yield of 9% pretty much supports the kind of valuation. If you look at the potential upside, even after the downgrade, the potential upside is between 7 to 25%.
Okay, so, well, that's the word on the metal names. Nikki, thanks for putting that in perspective. JBM Group, let's focus on corporate conversations. JBM Group has acquired majority stake in Germany-based Linde-Wiemann, which makes structural components and assemblies for automotive OEMs worldwide. To help us understand the strategic reason behind this acquisition, joining us on the show now is Executive Director Nishant Arya. Nishant, good having you. Thanks much for joining in. What's the reason you would have entered into this acquisition? How synergistic is it, and when does it start showing on your books?
So Linde-Wiemann is the company which we have acquired, and this company has about $700 million of top line, with about 70 years of experience and 17 plants which are spread across 8 countries, which are all strategically placed, whether it's Germany, China, South Africa, US, or Eastern Europe. And they have all marquee and key premium customers like Porsche, Audi, Daimler, PSA, Ford, BMW, Volkswagen Group. So all these key customers really give them a very good opportunity for going global, and having very strong expertise in the area of aluminum, hot forming, tubular assemblies, and multiple other alternate materials makes them a market leader in their space, and they have been working on premium products. And that gives us a very good perspective, because most of these customers are looking for global platform companies which are able to integrate not only manufacturing but technology and experience in this space. So it's a win-win for both the organizations, and definitely for all the JBM Group companies. When customers are launching global platforms, so we'd be the first choice. At the same time, we'd have access to all the new technologies which are upcoming in our sector. So we are well protected for the next 10 years. And this company in the last 4-5 years has developed very strong technology in the electric vehicle components as well as battery technology. So that would be available to us in our electric vehicle division, whether for buses or we are working with multiple customers as OEMs for their electric vehicle component requirements as well as key aggregates. So there we'll be working with them. So their experience would be really giving us a fillip, and we would not need to reinvent the wheel in those cases. Simultaneously, they are very strong in tooling, dies and fixtures using very high-end and very sophisticated tooling. And that would give us that know-how in our tooling division also at JBM Auto, and we would be able to enhance value. So from all angles, if you see from a component division, EV and buses, from tooling, it is very synergistic and would be giving substantial value. And I think in a span of next 2 years or so, we would start seeing substantial benefits in all our companies.
Could you just give us the size of this acquisition and you know, what are the terms of payment and the arrangements that have been made for this?
So it's a $700 million company. The size of the acquisition is that we've taken a major shareholding, but the thing is that since it's been acquired by a private company, so we are not disclosing the transaction value at this moment. But definitely, if I talk about the synergies and other benefits which companies would be able to accrue are quite substantial in nature.
Okay, so it's a $700 million revenue company, but you're not.
Correct.
So you can't reveal how much percentage holding as well you have been taking up?
Yeah, so it's majority shareholding which we have taken. We are not revealing the exact details as of now. We'll be doing that in some time.
Nonetheless, how are you going to pay for it? As in, are the funds okay on the book?
Yeah, it's perfectly fine. The company is having internal accruals and combination of debt for funding the acquisition.
Just wondering, so how does the listed entity benefit from this? Because I presume you're saying that it's done by a private entity and not necessarily JBM Auto, the listed entity, right?
Yeah, it's not JBM Auto or Jai Bharat Maruti. It's
so how does JBM Auto benefit from this?
Private. Because the global platforms for passenger cars comes to these two entities.
Okay.
So when global platforms for any of the global customers are coming, so they would be able to benefit as becoming the first choice. At the same time, when the technologies of hot forming or aluminum are being used, that is being used by all three companies in their specific industry segments. So they would be able to benefit from that also. That will be readily available. And even in case of alternate materials for lightweighting, since that's become a very important part of the whole automotive industry, would be available to them as well. Similarly, I spoke of the EV aggregates and battery technology will be available to us to JBM Auto for the electric buses as well as for the other electric components which we may sell.
It doesn't matter,
right? Well, we leave it at that. Thank you so very much, Nishant, for joining in. Appreciate you taking out the time. Nishant Arya there of the JBM Group talking about a recent acquisition that they have done, but that's not going to be done via the listed entity. That's JBM Auto. So that's no impact thereabouts. But obviously the synergies will work, the benefits will come in as well. But not being able to reveal how much they're paying for it, and neither the kind of shareholding that they will have post this acquisition. Watch out for that one. Moving on then, the UPL, its decision to acquire Arysta Life Science had investors worried, and it reflected on the stock price. But some assurances by the management seem to have gone a long way in soothing investor nerves. The stock has rebounded and to trade just about 10% away from record highs. In fact, today's session, I think it's amongst the top 2 gainers on the Nifty, up about 2% right now. Darshan is joining in. He's going to throw the spotlight on UPL. Darshan.
Yeah, so basically what happened was when the acquisition came in, or the news of the acquisition came in, UPL corrected. It fell almost 40% because of the big size of a $3 billion acquisition. So we split it into pre-Arysta acquisition when all the rumors came in, and this is when they finally confirmed the acquisition, and post that there is a big surge. Now they can clearly see that it's just less than 10% away from its record high. So the record high that we're seeing on UPL is 902. We're almost at 844 right now, so less than 10% away from record highs. So what has worked in favor of UPL? The concerns were clearly there on the Arysta acquisition. First of all, a word on the financials. Obviously, financials have grown well. The margins of the third quarter were high at 20.6%. And remember, fourth quarter is the extremely strong quarter that the company has, and probably in Q4 you will have a better performance from UPL going ahead. As far as the other things are concerned, the debt burden. The big concern was debt, 8,100 crores of debt, and this has come in on account of the Arysta acquisition. The management tried to allay fear. So when the management spoke to us post acquiring Arysta, they indicated that they will repay $3 billion worth of debt within 3.5 years, and the interest burden is not more than $120 million at a 4% annual interest rate. So that was the clarification that came in, and post that the company seems to be doing well. What are the cost synergies that the UPL and Arysta will have? They've said close to $250 to $300 million over the next 2 years. First of all, they will bringing a lot of Arysta molecules in-house. So that is where they will have the cost advantage, which will flow into the EBITDA. Joint procurement of raw materials with larger volumes will definitely aid them as far as their margins are concerned. And plant and people rationalization is something that they're looking at. As far as revenues are concerned, they're saying that revenues of $350 million over next 3 years is the synergies that they're looking at because of cross-selling of products. UPL is strong in certain areas like India, America and Western Europe, while Arysta is more stronger in areas of Africa, Russia and Eastern Europe. That is where the revenue synergies will come in. Integration of niche crops and product segments will definitely aid UPL. They will have much higher margin products that will come in. So that is something that will definitely aid UPL as well as Arysta. So these are some of the revenue synergies that we're looking at and why UPL of late has been doing extremely well. The market does believe that and the big risk here is that if the Arysta acquisition does not work out, there probably will be a de-rating if these synergies don't come in.
Even in comparison to the rest of its peers, it's at this point, even while just being 10% away from its life high, is relatively valued.
It's relatively cheaper. It's close to 15 times on an FY 20 basis. It's still cheaper than the global peers that like a Monsanto or a Biocrop or an Excel Crop Care. But it's slightly expensive than the Indian peers, but it's fairly valued as per the peer group.
All right, Darshan, thanks very much. That is the spotlight on UPL, which is the top performer on the index, 845 on the stock. Bringing in our experts on the show then, we've got Hemen Kapadia and Sumeet Bagadia, both of them here on the technical side. Yogesh Mehta will be joining us shortly with his fundamental views as well. I'm going to start off with you, Sumeet. On the index, we've crossed over 10,850 back to those levels after last week, which started off slightly weak. The trend looked softer with 9 straight days of losses, but we seem to have recouped from there.
Hi, good afternoon. Well, yes, we feel that the markets are headed higher, and from here on we can see a move till 10,950 or 11,000 levels. It's better to be on buy side. Those who have taken long positions, they can hold on the existing long positions. In fact, one can go ahead and initiate fresh long positions at the current market price. If there is a dip of around 20 to 30 points from present levels, then that should be used as a buying opportunity. Downside, Nifty has supported around 10,750 levels, so that should be the stop loss for long positions for the upside target of 10,950 and then 11,000 levels.
Okay. Hemen, what's your approach to trade today?
I think I'll go with the boring approach since early December. Sell 11-2 calls next month because there's no premium left in this series, and sell the 10-5 puts. I think we're going nowhere, and it doesn't look like we're going to go up anywhere, frankly speaking, Neeraj.
Okay, so on the index, we don't believe that this momentum will continue, I would reckon. Even on the Nifty Bank, you would believe the same thing.
No, Nifty Bank looks a shade better, but frankly speaking, we flattered to deceive, and it's been conflicting, Neeraj. I'll give you a small example. Now, the daily MACD is giving a buy, the weekly is in a sell, the monthly is in a sell. So, no, I'd say the same thing. Maybe there are some near-term flutters. Maybe Bank Nifty is 27.96. We go to 27.165. Maybe 27.300, but nothing. I don't think it's going to be beyond that. We remain range-bound. Nothing changes yet.
Okay. Let's talk about stocks then, if the index doesn't have much to offer in terms of a trade. Sumeet, Bagadia, what are the stocks that you're recommending this afternoon?
2 stocks for the day. First one is from pharma space, and that is Sun Pharma. It's looking good. It seems like from here on we can see a move up, move till 450 or 455 levels. One can initiate long positions in Sun Pharma at the current market price, with a stop loss to be placed at 424 levels on lower side, and on high side 450, 455 can be the targets for next couple of days. Second stock for the day is from auto space, and that is Hero MotoCorp. After a correction, now we are seeing a pullback or bounce back move in Hero MotoCorp. This move can extend and can move up till 2800 or 2850 levels. One can initiate long positions at the current market price, with a stop loss to be placed at 2670 on lower side for the upside target of 2800 and 2850 levels in next couple of days.
All right. What about you, Hemen? Your stocks?
MCX at 677, stop loss 670, target 691, Devina. Second stock is VCard at 192, stop loss 190, 189, target 198. Both we are playing for a bounce, a pullback. Mechanical indicators are given crossover buys, oversold, positive divergences. Basically, we are playing for a bounce.
All right, so 4 stock ideas there from the technical experts. Bringing in Yogesh Mehta, he is Vice President for Research Sales at Motilal Oswal Securities. He'll be joining us in just a few moments. But let's talk about the stocks that are active in this afternoon session. We were talking about UPL, just about 10% away from its life highs. 840 is where it is right now. What would you do? 845.
UPL along with Reliance are 2 stocks which are looking good from a longer term point of view. I think everything else is virtually in doldrums, to be honest. So high tops, high bottoms, indicators positive, daily, weekly, monthly. Everything seems hunky-dory. We're going to walk into a brick wall at 900, which is the all-time high, Devina. I'm not sure how we're going to be able to take that out in the first attempt. We could not. But if I were to take a 2-year view, we are going to 1100. We are going to go to 1100 and 1300 as far as UPL is concerned.
Okay, that's a very impressive target on the upside, but you need to have the patience to hold on to the counter. 845 right now. Yogesh Mehta is here with us. Yogesh, good afternoon to you. Let's talk about 2 active pockets in today's session. One obviously being real estate and housing finance companies on the back of the cut in GST that's come about. And the other has been the prolonged rise in sugar companies. And it looks like, you know, this is money that's coming to the counters to stay. I mean, there have been bouts of profit taking, but not to that great an extent, which indicates that this could be a trading play. This looks more structural in nature. What's your sense?
Yeah, good afternoon, Devina. Now, number one, if you look at 2 news which have been there over last 1 weekend, and one week is just yesterday. Number one, which is about Makan, that low-cost housing finance companies as well as the real estate developers, where GST has been cut, is a booster. 10.76, if we consider that 60 square meter, then it comes to about 640, 650 square feet in any of the geography. So that gives that ballpark. It gives that yes, if GST has cut, then all these real estate developers, those are who are into residential properties construction in the tier 2, tier 3 cities as well as the metro cities, not the metro cities but the tier 2, tier 3 cities would have advantage, wherein we can look at prestige estates, or maybe Oberoi would not be the fit into that because they are on a higher mark. But prestige estate is something, or the Phoenix, these are the 2 where can be looked at as a booster for that. Apart from that, housing finance companies will have also added advantage over there with the ticket size varying between 20 lakhs to 70 lakhs ticket size loan. There also it seems that it would be a good opportunity for them to tap new customers. So we are viewing this as an opportunity on not as a trading, because the news is out and everybody knows that, but henceforth it seems that 2-3 quarters down the line we will see some good traction over into EBITDA and the profitability for at least the real estate companies as well as the housing finance companies.
All of the stocks.
The second question you asked for about the sugar stock, though we don't track it, any of the sugar companies, but the MSP hike which has come maybe 10 days back from 29 to 31 rupees for all the sugar millers, and that to have better earnings for the farmers on the sugarcane side. So that has driven some, at least it seems that the worst is already priced into this sector. And now government is also lining up for some benefit for the farmers, and that can run into a profitability or maybe a cutting down of losses further for the sugar manufacturers, and that is driving some demand stocks right now.
All right, if you take a look at these real estate counters, all of them have actually lost out and are trading way below the highs of the day. In fact, in the red for most of them, and even the housing finance companies. I think they'd already run up pretty steeply in anticipation of this cut, and once the news is out, I think those trading hands have moved out of these counters.
Certainly seems to be the case. Buy the rumor, sell the news, and they started off well, but post that they have certainly cooled off in the session today. Yogesh, what was the conversation that happened around Adani Ports in the morning? The stock is now down 9.5%, trading at the lowest point of the day. Certainly, the street is not convinced by this move.
Post earlier month also there was an announcement, and this time again with the stake sale announcement of 1660 crores. So that is not being considered as so positive for this company. It seems on the prima facie, and the company it has been reaction is seen on the street right now. Is easily visible, but we think that better. I would say right now it is too difficult to comment at this point in time, because immediate reaction from the investors and the traders, that should not be pursued. That longer term also there is a problem for the company. But this is just an initial knee-jerk reaction, and need to see some nitty-gritty over next 1 or 2 quarters for this.
Well, the related party transaction not quite working well for Adani Ports in today's session for sure. Trading at the lowest point of the day. This must be steepest fall in a number of quarters, to be honest, and it certainly doesn't look like it is reviving in any kind of a hurry. Is Adani Ports 9.5% lower? What about so watch out for Adani Ports, of course. I don't know if the other Adani Group stocks have had that fall or no, because what transpired for Adani Ports has not necessarily transpired for Adani Enterprises. This is the company that will get the money. So no other collateral damage to any of the other group stocks. It's only restricted to Adani Ports. What about Yes Bank? 227 and counting. After a while, we are seeing these levels. For the first time, I reckon, after the new CEO announcement came in. Yogesh, what's the call here? House call on Yes Bank?
Since all the news related to the new management taken over and the balance sheet annual report, risk assessment report by RBI, and all these are now behind, and still the prices are quoting at 227 rupees, which it has given a spike of 170 to 230, back to 170, now again back to 230. So it seems that now all the negatives are already into the price. Now real valuation play is coming into the picture with a lot many interest, which is again showing into the price right now. So we believe that the valuation way on the price to book, if Arya report is being pursued as what they have given, there should not be any, they cannot take it back. So that is all is there. We already had a conversation about this. So I feel now valuation should be compelling here, and that should show that yes, the bank is back on the track with stable NIMs, growing book with the sufficient growth, and the new management of Nith Gill will do well for the company. We believe that though right now we cannot give 3 times price to book factor for this company, but at least 1.7 to 2 times price to book, then also the price target could be in the range of 270 to 290 over FY20.
All right, Sumeet, Bagadia, on the charts, Yes Bank at 227. Would you take a long call on this one, or probably see some profit taking after the run-up from levels of about 175 that we recently saw?
It's a buy call on Yes Bank. Yes Bank looks like it can move up from here on, and we can see a move till 240 to 50 levels. That would be the immediate target for Yes Bank. Once the stock is able to break 250 on closing basis, we can see a move till 270 or 280 levels also. So I think Yes Bank is a good buy at current market price. Those who have taken long positions at lower levels, they can hold on the existing long positions with a trailing stop losses to be placed at 217, 218 levels on lower side.
Okay, got that. Adani Ports, Hemen, since we were talking about it.
Adani Ports, you're right, this is the only one which has fallen off a cliff, and huge volumes over here. There's a bearish gap, Devina, which is obviously not a good sign. We've been in this range between 294 and big range 415 for the past 6 months, or maybe more than that, and that doesn't change. We have support just below 320, Devina. So near term, I'm not sure if there's too much of downside below this 318320 level, but if I look at the bigger picture, it's gone nowhere in the last 2 years. It doesn't look as if it's going to go anywhere. Yeah, but a caveat, if it cracks 295 in terms of closing on the weekly chart, oh man, then it's going to tank.
Okay. Well, 9% lower for this one. It's chalk and cheese, the kind of behavior that some of the stocks and sectors have shown in the session today. Stay on, gentlemen. Just a quick management conversation. Mold-Tek Packaging inaugurated its 9th manufacturing unit in Vizag. It'll make paint containers for clients in India and East Asia. To give us more details about the contribution from this plant, a quick perspective from the chairman and MD, J. Lakshmana Rao. Mr. Rao, good having you. Thanks for joining in. What is the capacity of this plant that has been inaugurated, and does it start contributing the current quarter itself, or you would reckon that the capacity utilization levels will get time to get filled up?
Good afternoon. Yes, the plant in Vizag was just inaugurated yesterday with 4 machines and 4 more machines being added by end of April. So these 8 machines will have an annual capacity of more than 3,000 tons of plastic processing per month, per annum. And this plant will start commercial production by around 15th of March itself. So there may not be major contribution in this current financial year, but right from starting of April, we anticipate the plant to go with at least around 100 to 125 tons of production per month. That's about 1,1600, 1,800 tons is what we are anticipating in the year 1. So in the Mysore, we started on 7th of February, the inauguration, and the commercial production is about to start now. We received the commercial orders, and initial supplies can go probably in the first week of March itself. So Mysore is about 2 weeks earlier, and I guess in March we may do at least 70 to 80 tons, and starting from April, that plant also will contribute to 100 to 150 tons per month. Thereby adding around 1,800 tons of initial production in the next financial year. And as you were aware, these 2 plants started with 3,000 type TPA, are supposed to rise up to 6,500 tons per annum by 22-23. That's mean in the next 3.5 years, we need to partially more than double the current capacities.
Mr. Rao. Yeah, so Mr. Rao, in terms of rupees crores, how much does this 1,500, 1,800 tons that you do on a monthly basis from both of these plants, approximately from both of these plants, lead to?
1,800 tons per annum, not month. Per annum is okay. Equivalent to about 35-40 crores per plant. So 75 to 80 crores annual turnover can be added from these 2 plants in the next financial year.
All right, Mr. Rao, just add on to how much now does your total capacity stack up at, including these 2 new plants?
See, last year we did about 20,000 tons, 19,800 or so, and this year we are completing 22,000 plus tons of production. And next year, these 3,800 tons addition means 3,600 means you can say it is around 16% volume growth coming from these 2 plants alone. So next year probably we will cross 26 26,000 tons, up from 22,000 this year. So we are anticipating a top line volume growth of more than 20% for the next financial year.
All right, volume growth of more than 20%. So ahead of that, getting these plants kick-started. What was the investment in these two plants?
Sorry?
What was the kind of investment that you made in these two plants?
These two plants, the investment is the tune of 40 to 45 crores put together, because these are greenfield plants, and the land and buildings, mainly the land and part of the auxiliaries and everything, is meant for 6,500 tons of enhanced capacity to be ramped up in the next 2-3 years. So going forward, the investment would be much lesser. For example, to achieve from 3,000 ton TPA to 6,000, additional 10 to 12 crores of worth of investments would be sufficient.
Okay, got that. We leave it at that, Mr. Rao. Thank you so very much for joining us this afternoon.
Thank you, David. Thank you.
That's the management at Mold-Tek Packaging, talking about the two new plants that they have just commissioned. Moving on to our chart of the day segment, the world's fastest growing aviation market is showing signs of ebbing. Aviation passenger growth fell to single digits in the month of January, an occurrence after a long time. Sumeet Sarkar is back with us to take us through the details of this not so very great news for the airlines. Sumeet.
Yes, if you see, the passenger growth in India has slowed down to around 9% in the month of January 2019. As you can see here, it has come down to around 9%. Now, this is the slowest growth rate reported by the industry in the last 56 months. Also, this is for the first time in over 4 years that the domestic passenger growth rate in India has fallen to single digit. Last time it was in July 2014 when the passenger growth rate had fallen below the 10% mark. Now, this slowdown in passenger growth in January could be attributable to higher ticket prices and the end of holiday season. Now, if you see, in the last 4 years, on an average, the passenger growth rate in India was around close to 20%, making it one of the fastest growing aviation market. However, now going forward, this is expected to slow down. A CAPA, an aviation consultancy firm, expects the domestic air traffic to grow at a lower rate of around 14% for financial year 2020 from a 20% average rate that we have been seeing in the last 4 years.
Okay, so that's the chart of the day. And Sumeet, thanks for putting that into perspective. Yogesh, you guys surely have coverage on the aviation stocks. Jet is going through issues of its own, which we do not know which side it will turn up at. What do you do if you want to invest money in this pocket? Would it be one of SpiceJet or Interglobe Aviation? Or would you just avoid it completely in a scenario right now when crude is showing signs of moving up?
Since aviation sector is in always a jittery mode, barring Indigo, which has done since IPO, and before that they are into profits, and this year is the only exception where they are incurring losses. But it is always a flip-flop. You never know about how the EBITDA or the profitability will turn around, and that way would suggest that completely avoid on aviation sector. Rather than that, one can look at any other sector which can be on a doldrums so far, but the chances and prospect of moving without any uncertainty is by far visible. So better to avoid on the aviation side, because even if the mid cap or the small cap companies may turn up in maybe next 1, 2 or 6 months, but these are unlikely to grow unless and until there is a stock specific news. So better to avoid on the fundamental side for the aviation sector particularly.
Sumeet, Bagadia on the charts with Jet Airways trading around 3% under in today's session. Would you short the counter?
Jet Airways is a weak counter, yes. One should initiate short positions. Stock is weak till the time the stock is not able to break 240 to 45 on higher side. Downside, there is a possibility that we might see a move till 210 or even till 200 levels. I think it's better to avoid long positions, and in fact one can initiate fresh short at the current market price or on bounce back till 238. One can initiate sell positions for the downside target of 210 and 200 levels.
Okay. Watch out for Jet Airways. I must say it's a difficult stock to trade, but Sumeet Bagadia believes a short trade can be initiated on that stock. Just before we'll thank Yogesh in just moments from now, I'm just trying to get a sense of stocks which have inched up even further from where they were at the start of the hour. So I think there is strength in Apollo Hospitals, which is up about 4%, 2.5%. I think that pledge share issue seems to have been digested by the market. It fell quite strongly on that day. If you get up this year's chart, you will see what I'm talking about. In the month of February, early February, the stock had a deep gash, the Apollo Hospitals, and now starting to just inch up a little bit. So do watch out for this one. Actually, if I can ask you, Yogesh, Apollo Hospitals, quality name, got beaten down for a temporary hiccup. What's the advice that you would give to viewers or to your clients?
And first of all, we don't have coverage, so there is no question of advising to customers. But since the stock has beaten down because only of the issue of the pledge shares, and for that the clarification had already come, and this should be purviewed as one of the business strategy rather than comparing all the apples as the earlier apples which you have seen earlier in the past or maybe the recent past. So there are certain demarcation into the management and other stuffs. So one needs to really gauge in depth and on the different waters. Each and every water is not a deep water or maybe not enough for on a quality measures. So that demarcation has to happen from within, not rather than outside. So that needs to be taken care of.
Okay, Yogesh, leave us with an idea that you would recommend your top clients to buy into right now.
Currently, Neeraj, what we are preferring is mid-cap is too difficult to judge right now, but those are trading at a very attractive price right now. So we are waiting for the upward curve to be there. Rather than that, right now we are looking at IT sector as it seems that they are poised for a good growth over the next 1 or 2 quarters more. So right now they are available at again on a corrective mode with TCS has corrected by 10%. Even Infosys was down by 5%. But even today they are retraced back. But still TCS, the Infosys and HCL Tech and the TCS, these are the 3 recommendations we are giving to the customers to go for in current market.
Okay, Yogesh, we'll leave it at that. Thanks much for taking the time out and being with us today. Really appreciate your time. That's Yogesh Mehta of Motilal Oswal. Do watch out some select names. By the way, as we speak, Yes Bank is trading at the highest point of the day, 3% higher. There is some advances that Bharti Airtel seems to have made in the last 30 odd minutes of trade. So that's just inch up a little bit, last 10 odd minutes of trade, excuse me. But clearly, the winner over the last 1 hour has to be Yes Bank. Big move from where it was to where it is currently, 3.5% trading at the highest point of the day. The broader markets too have the select set of gainers for themselves.
It's interesting, even Titan for that matter, its life highs are 1,076. It's made that just a few days ago. And it's very close to once again trading at those levels. So 1,041 for Titan. For all the dips that it had seen in between, the stocks come back with, tremendous gusto. And now, once again, right at the top there, about 12 months, 30% gains, and that's the performance of the stock over periods of time. Hemen, Titan?
Slightly tired, Devina. We walked in a small correction because that move from 870 to 1070 is slightly tiring. So maybe it consolidates a bit more. Range is between 1015 and 1075. I think it would take a few trading sessions more, Devina, but the outlook, like you said, very clearly positive. We are at all-time highs, clear blue skies, no resistance levels. But yeah, we need to close above 1075 to appreciate further. I'm not sure how long it takes to consolidate over here.
And we spoke about Bata also a few days ago, which was trading, at its highs too. And the stock in today's session marginally higher in trade, but nonetheless, this too has had a stupendous run-up. In the last 3 months itself, the stock has propped up 40%. Really good going, all cylinders firing for this counter. Numbers were solid, outlook is solid, prospects are solid. In 12 months, 82%.
That's a spectacular run and something that we analyzed at about 225 the other day. Premiumization, cost control and margin uptick, all of this is aiding this up move on Bata India. That stock through time frames in this year has given extremely solid returns. You would take all of these returns with both hands had you known that you would be getting at the start of the year, start of the quarter or start of the half year as well. take a break on that note. We come back, maybe talk more about Bata fundamentally and some of the stocks as well. On the other side of the break, we get you, of course, Fab 4, then get you what dealing rooms are recommending in the session, and then at 3:20, get you some closing strategies. Stay tuned to Bloomberg Quint Live.
Fulfill your dreams of buying a new house, new car, or achieving academic success. Attractive interest rates and easy processing. The trust, commitment, and excellence since 1937. Indian Overseas Bank, good people to grow with.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We are getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
All right, 28 minutes left to go for market closing. We're counting down to it for the indices now, once again at the high point of the day and going from strength to strength. The Bank Nifty now almost 1% higher, 246 points gain, crossed 27,100. Most of the sectoral indices are doing well. You've got gains coming in across the board. You've got your IT index, which is doing relatively well and much better in comparison to the others. That's one of your top gaining index movers. So 1.9% on the Nifty IT, led higher by all the big names there, Infosys, TCS, Tech Mahindra, HCL Tech. So doing really well on that count. But aside from that, just take a quick look across Europe and see how that part of the globe has opened up for trade, and positive cues coming in from there as well. A third of a percent higher on the FTSE 100, CAC DAX up about 0.5% plus. Dow futures will come up next, and hopefully that too is showing you a positive start, so about 0.5% on the Dow futures. So all in all, a good support coming in from global markets as well. But let's move on and let's find out what has made it to Yash Kapadia's list of Fab 4 stocks for today. Yash, good afternoon.
Good afternoon, Devina. It's raining orders for the large defense companies, Bharat Electronic being one of them. It's up close to 2% into 2.5% in today's day of trade after the company announced that it has received a large export order worth close to $33 million from an Israel-based defense company. So watch out for that. Sugar companies are in focus as well. Balrampur Chini being one of them. It's up 4% in today's day of trade, as well as has hit in the fresh 52-week high of 133.1 one, so watch out for the sugar names. Motherson Sumi is up 10% in today's day of trade. This is on the back of the positive news flow coming in after U.S. President Donald Trump took to Twitter to announce that the United States has postponed the date of imposing additional tariffs on Chinese products, which is a big positive when it comes to Motherson Sumi. And lastly, I want to highlight Hemen, which is up 3% in today's day of trade. Some fresh longs seen there with open interest build up of more than 15%, so watch out for that.
Yash, thanks for putting that into perspective. A lot of stocks flying around. Just before we move ahead, I don't know if we mark the volumes or no, but since we are now trading at the highest point of the day, pertinent to mark the volumes that we have currently at hand. It's, remember, expiry week, so volumes naturally, at least the F&O volumes would start higher, but the cash volumes at 27,000 crores indicate that we might nudge that close to a 28.5, 29,000, maybe even 30,000 crore mark shortly. So let's wait and watch if that happens or no. Vinit Bolinjkar, Head of Equity Research at Ventura Securities, with us on the show. Vinit, good having you. Thanks so much for joining in. There is traction in a bunch of sectoral sectors today. Let's start off with the large caps. We'll also discuss sugar in a bit. But IT is amongst the sectors at the forefront. Is it just some sector rotation at play, or would you believe that people can invest fresh money into large cap IT?
So I have our strategy at Ventura is to go with defensives, that is the long dollar trades, which are pharma and IT, and also go along with commodity stocks, because we believe that all these three segments would become beneficiaries in case there's a conflagration at the borders, and there is a lot of follow-through action also coming in for commodities with steel MIP could probably be imposed, and we believe that this will all lead to serious growth in all these three areas, and hence we are long on these.
Moving up in the session today, what is also doing very well today is Motherson Sumi, which is up about 11%, and sugar, which is doing up about extremely well in trade. Motherson Sumi, firstly, maybe there are some technical triggers that play out here, but anything fundamental that could have led to this big up move today? Though I must admit that that stock has gained from 130 odd levels, so maybe get a chart check going and then we'll get the fundamental check going. Sumeet, Bagadia, Motherson Sumi at 160, up about 11%.
It's a very good buy. After a long time, stock has given such move. It was the counter was oversold, and from low levels we have seen a very good move in last 3 days. Today the move is with volumes, and that too with a good price action. It says that the stock is headed higher, and from here on we can see a move till 165 levels. Those who have taken long positions, they can hold on the existing long positions with the trailing stop losses to be placed at 149 or 150 levels on lower side for the extended target of 165. If 165 is taken away, then we can see move till 175 also.
Should put up a Chalet Hotels. I think that too has made new highs in today's session. Recently listed counter, so not too much of Chalet Hotels. Got listed in the first week of February, listed at a 5% premium over the issue price, currently at 185 odd levels, so about 1.6 odd % on the counter. Not too much to go by, because you don't have too many technical data points to match them with. But Vinit, on a fundamental basis, is this something that you would advise clients on? We have Vinit with us. We're trying to patch that line with him. But in the meantime, just to quickly look at a few other movers in trade within the broader market space. We're taking a look at the usual suspects that we already spoke about, which is your sugar, your real estate, your housing finance companies. But within the overall Kaveri Seeds, one stock which is down 33% in the last 1 month. Even after management clarification, shareholders really not in a forgiving mood, and the stock has been beaten out of shape. Hemen, a Kaveri Seed?
2-year low, Devina. We've given a downward breakout from a distribution pattern between 660 and 440. There could be some near-term relief coming in, simply because we've gone down from 620 to 370 in just 4.5 weeks or so. But picture is not looking good. The longer term indicators have signaled a sell, and you have ridiculously high volume. It's what? It's almost 7 crores. I think in the NSE cash market, Devin, I believe this is probably the highest volume since in the last 10 years or so.
On Kaveri seeds.
Yeah, it's unusually high. I'll just tell you exactly. Last time this volume happened was somewhere in December 2000, quarter ended December 2007. And after that, we haven't seen so much of volume. Oh my God, yes, it's the highest volume. That was 9.5 crores, and here we are already in this. I'm giving you quarterly volumes. We're already at 7 crores.
Wow, so big volume moves on Kaveri seeds, and the stock about 2.5% lower in trade. But this is
the quarterly volume, so I'm assuming it's a culmination of since the stock started falling at the start of February with regards to its issues that it had with the license getting cancelled. Management clarifying, but really no help to the counter.
Yeah, maybe we can get the AV80 function on the Bloomberg terminal for Kaveri seeds and just show the kind of volumes that have happened today as well. The quarterly volumes would be looking high, but maybe, just maybe, the daily volumes in today's session at 4 million shares on the NSE would also be high. Yeah. So, both the points are right. Devina was speaking about how the volumes have started moving up. The blue line trending upward shows that the volumes on an average have moved up. The white line today shows that there is unusually high volume activity in today's session on Kaveri seeds. So do watch out for that one. Then since we were talking about stocks at highs, Wipro, by the way, is trading at I think 52-week highs or life highs as the case may be. There's a small cap stock called Canterbury Retail, which is trading at highs, but confess ignorance about the fundamental prospects of this one. So won't really dwell too much on it, but for the fact that it is trading at highs. So do watch out for Canterbury Retail as well. It's 350 crores of market cap. Don't quite know. And Aditya Birla Fashion at about 223, another 1.5% higher, trading at close to 52-week highs. Sumeet Bagadia, AB Fashion, or for that matter, Wipro?
Well, see, AB Fashion is also looking good on charts. It has given a very good move in last 2 to 3 months time horizon. It seems that the stock is headed higher, and from here on we can see a move till 240 or 250 levels also. I think those who have taken long positions, they can hold on the existing long positions. Once the closing over 225 is seen, we can see a move till 240 to 50 levels. So it's a good buy. Downside, the stock is supported around 210 to 15 levels. Till the time these levels are not taken away, it's better to be on buy side.
Okay, so that's the verdict on both of these names. Yes Bank roars ahead, TCS roars ahead. So good gains for both of those large caps. Do watch out for them. We should also watch out for what's happening at the broader end of the spectrum to stocks like Greenply, which is up 6%, but a bit of a spike coming in the last few minutes. So a sharp move upwards. A sharp move upwards for DCB Bank as well is up 6%, but has gained a little bit in the last few minutes of trade. As also a stock like Ramco Cements, which was in the red. No, actually, yes, it was in the red and now trading in the green. Again, a sharp spike upwards. So 2 or 3 names which you should watch out for. Hemen, Kapadia, can I ask you to give me chart checks out here? Greenply may not be as liquid, but I believe DCB Bank is, and as is stocks like CenturyPly, for example.
DCP, Neeraj has given a breakout today from approximately 24 trading session consolidation phase. Indicators have turned positive. Volume NSE cash market is what, 2 crores 27 lakhs 43,000. This volume is the highest since 21st January. So that looks interesting. And the other stock that you may positively interesting, CenturyPly, oversold, downside limited, rounding bottom in place. A bounce is in the offing. I think a stop loss of 157. One can go long. Looks good, Neeraj.
Okay. So watch out. Both CenturyPly and Greenply, incidentally, are doing rather well for themselves in the session today. Okay. While we wait for the closing strategies, in about 7 minutes we'll get you the closing strategies. It's a good time to get in what dealing rooms are recommending in the session today. Darshan Mehta is here with his channel checks. Darshan, good afternoon. What are you learning?
Yeah, so one of the stocks that's been spoken about today is Apollo Hospitals. It's up almost 4% the last time I checked. There is traction. Dealers do indicate that the Apollo Munich deal, which the management said that is one of the assets that they will look to pair off to get the pledge down. That deal is fast tracked, so dealers believe that the announcement could come in very, very soon. So there is is positive traction that's going on Apollo Hospital. Remember, Apollo Hospital has 10% stake, but the promoters have 40% stake, which will be used to reduce the pledge on the company. Sugar as a theme is doing well. Some of the HNIs are actively accumulating. You see the stock, all of them are doing well. Dhampur, Bajaj Hindustan, Renuka Sugar, Bajaj, Balrampur Chini, all the sugar stocks are doing well in trade. So sugar as a theme, they believe that the momentum will continue. And finally, among in a volatile market, a safe stock in which dealers believe that the momentum will continue is Wipro. Trading at a fresh 52-week high, dealers believe that the positive traction, probably the move on the higher side will continue for Wipro.
Watch out, momentum buying may continue for Wipro, and that stock is certainly up and about. Just before we get in, some pieces on some stories, including the one on IL&FS, a stock that has just bounced up into the green after staying subdued for better part of the day is Indian Oil Corporation. Remember, OMCs have rather been struggling today, but IOC, as we speak, has just moved up into the green in the session. Okay, second time in the day today, but now firmly in the green. Sumeet, Bagadia, I want to dwell on IOC for a bit.
See, these oil marketing companies are giving good move. From last couple of days, what I've seen is that some buying traction has been seen. As far as your question on IOC is concerned, yes, we can go ahead. One can initiate long positions in the IOC. The stock looks like that it has broken the resistance. Earlier the resistance was placed at around 136, 137 levels. Now it's quoting at around 139 levels. So it's above the resistance line. If the closing is seen above 137 levels, then we can see a move till 142 or even till 149 levels. I think one can initiate long positions with a stop loss to be placed at 134 levels, so lower side for the upside target of 130, 145 and 149 levels.
Okay. Stay on with us, gentlemen. Lots more to talk about, but just addressing a piece of news. The National Company Law Appellate Tribunal has ruled that IL&FS entities cannot be declared as NPAs without its approval. Remember, the NCLAT had earlier allowed certain IL&FS group firms a moratorium from servicing their debt. But despite failing their debt obligations, these firms cannot be classified as bad assets. Arpan Chaturvedi, who was in court when the judgment was announced, has more details.
Well, the NCLAT has made it clear today that IL&FS and its group companies, they will not they will not be classified as NPAs. This order came in today's hearing. It was a short hearing. There were no arguments. It was listed for orders on an application moved by certain lenders, and in that the bench headed by NCLAT chairperson S.J. Mukhopadhyay passed these orders. There's also a moratorium order which is in application in this particular case. In the last hearing, we saw the government had submitted an affidavit where they had classified the IL&FS and its subsidiaries under 3 groups based on their ability to service debt obligations. After that, we also saw that certain companies, based on their ability to service their debt obligations, moratorium was lifted on them. And today, in today's hearing, this was specifically on the applications related to the classification of NPAs, and the NCLAT has said that for now, neither IL&FS or any of the group companies will be classified as NPAs.
All right, some updates coming in there, but Hemen, are you tracking NBFCs closely right now in terms of whether or not you would like to take any sort of trades there?
In NBFCs, I am looking at, I'm not sure if that quantifies exactly, but Bharat Financial Inclusion, and in a non-NBFC, IndusInd Bank, Federal Bank. I think all of these, Devina, have shown sparks of life. Either there's long built up or volume in the cash market, oversold situations. I think DCB has led the move, but I think now IndusInd and Federal are also shaping up well, Devina. But they're not NBFCs, they're banks.
Okay. Devina, something's happened to Motherson Sumi. Now, I can't place my finger on if there's fundamental news or no, but the stock is up about 11.5%. I searched all through, I think we searched all through for whether Trump spoke anything regarding to European cars and if that works, but no, that's not really the case. So must have been some fund buying or some recommendation made somewhere, as a result of which Motherson Sumi as a stock has gone up so strongly today. Couldn't find any fundamental reasons thus far, but 42 million shares traded. The stock has gained the last couple of days, but from 130 or 3 or 4 days ago, which was distress levels, the stock is now 260. That's a remarkable 20-22% up move in a spate of what, 6 or 7 trading sessions. So good strong uptick today.
And that's been the case with most of the auto ancillary stocks. Off late you had seen the likes of Bharat Forge doing what it did. Probably Motherson Sumi a little late to the party, but you've seen the stock move up the way it has. And most of the analysts that we spoke to, we had Mahantesh Tabarat who had come the other day, and he said that he likes some of these names going forward as well in terms of the business prospects. So looking good for some of these names. But today's session is purely just Motherson Sumi and the kind of ride it's having.
It's just a brilliant uptick that we've seen in the session today. Vinit Bolinjkar, of course, is back with us now. Vinit, any thoughts here? Motherson Sumi and the kind of move that it has made? I don't know, what's the call that you as a house have here, though?
So we are also clearly negative on the auto pack and Motherson Sumi because I think they've lost the momentum in terms of growth. We would be waiting for 1 quarter results to really, put out a buy on this stock. So what I would suggest is these handsome moves that have come back, which are absolutely pullback rallies, should be used to taper positions in Motherson Sumi, and once some kind of fundamental clarity emerges, then only one should get into these stocks. Else, these are great moves where investors who are stuck up can exit these pullback rallies.
Ashok Leyland, since we're on the topic of autos, one of the worst quarterly performances that we've seen. In fact, last 4 quarters, the price performance has just been going lower. It was at a 52-week low, currently just marginally above it, but the stock has been battered out of shape. The management, however, when we spoke to them, said that they're pretty ready on all counts with regards to BS6 transition. They're hoping for pre-buying to kick in, and that will in turn help the overall volumes for the company. But at this point in time, not much is happening with the price. So today's session 1.7% higher, but overall, does it look a little gloomy for Ashok Leyland, Hemen?
Well, yes. Frankly speaking, it's been looking gloomy for the entire auto pack, including ancillaries and tires. But I think all of them are oversold. They're all giving corrective bounces, and I think Ashok Leyland is not any different. We definitely have a short-term bottom in place. If we are at 83.10, Devina, we close above 84, we'd be giving a small minor move to 88 levels. If 88 is taken out on the weekly chart, I think then we look at it more from a weekly recovery point of view. But yeah, near-term deeply oversold, positive divergences. We are undergoing a struggling, straggly bounce, but nevertheless.
Okay, just pull up one more stock, GVK Power. I mean, it's a penny stock, sub 10 rupees. But remember, Friday's session was characterized by all of these penny stocks moving up, all sub 10 rupee stocks moving up in a big way. And GVK Power has been doing what it's doing since last week. In a matter of 7 days, the stock has moved up about 37%. In the last 5 days, it's been even more. The contributions that came in on Thursday and Friday last were that of 20% circuits on both the days. And today, yet again, another 10% coming in on JBK Power on the back of the stake sale of the Bombay airport. But while being a small stock, would you look at it in any way? JBK Power and Infra, 8 rupees. But, you wouldn't disregard a 45% jump in 3 days.
Well, Devina, this requires too much of bravery. I don't think I'm that brave. But I think you all spoke about sugar as a theme some time back. I'd be more comfortable buying Dwarikesh at this level, 9%.
Is that your closing strategy?
And that's positional. My closing strategy, I have multiple.
Finish your Dwarikesh call first. Let me not bombard you with too many things. Let's talk about Dwarikesh first. Yeah.
So, frankly speaking, I'd be, like what Devina is saying, vis-a-vis a GVK, I'd be more comfortable going long on Dwarikesh, rounding bottom positive divergence. Yes, and this, despite we are up almost 10%. So, despite the 10% jump, I will still plump for Dwarikesh. I think we are heading towards 32 and 38 in the next few weeks. So that looks better. GVK and Suzlon, like I said, it requires a lot of bravery. I don't think so. I'm that brave.
Okay, let's talk about closing strategies. Then, Hemen, let me start with you only first.
I guess there are a bunch of stocks. Suddenly, everything is looking a bit too good. Money making is never so easy. But I guess a few stocks, I guess would be a toss-up between an Neeraj and Axis Bank, I believe, and probably an IndusInd Bank. But yeah, Axis Bank, BTST.
Okay, BTST on an Axis Bank. That is Hemen's top call. Sumeet, what about you? Your top call?
Grasim looks good to me. I feel that Grasim can move up from present levels. One can initiate long positions in Grasim at the current market price. The stock has support at around 760, 765 levels. So that should be the stop loss for long positions. From here on, we are expecting Grasim to move up till 810 levels. And if 810 is taken away, we can see move till 830 also. I think it's a good bet for next couple of days.
Vinit, what about sugar? I mean, a lot of people don't like. Sorry, yeah, make your point.
I've always been recommending Balrampur Chini. I still think that the stock has got still more legs to go, and see, we are going to be ethanol compliant to 20% over the next 3 years, and with Brazil's crop also forecasted to be on the downside. I think that, and the Indian crop estimates which were at 35 million tons have come to below sub 30, and we are doing a lot of exports. So there is not too much of inventory in the system. So I believe that over the next 2 years, sugar stocks are going to have a clear field day, and Balrampur Chini purely because it trades at a significant discount to the entire pack and is one of the largest players in the market. That is my top pick. I continue to go with Balrampur Chini.
Yeah, if they do everything right, I think certain calculations seem to suggest that they could knock in profits of northwards of 400 crores in the year to come, and that means the stock is trading at what, 6-7 times 1 year forward earnings for a sector that is on an upswing. Vinit, what's the math behind these valuations for Balrampur? What do you expect the company to clock in? And therefore, what's the kind of multiple that you would give to this one?
See, what happens is that as the story pans out and things become more clear and, when you get more visibility in terms of 2 years, I think 10, 11 times, 12 times is a very decent number to go by with in terms of multiples.
Okay. So do watch out for this one as well. Vinit, then let me ask you, I mean, sugar is, of course, you explain the math here, but if you had to recommend somebody to buy into something, what would that be? Would it be SAIL? I mean, I think the metal counters are on a roll today. Would it be SAIL or would it be something else that would qualify as among your top ideas?
See, we published a report on SAIL about 6 odd months ago, or even larger than that. We were very early into the cycle. And the 6-month results that have come out after that, they're fairly tracking what we have been saying. So the numbers are not going to be very deviant in terms of EBITDA or even net profit numbers. So in my opinion, if at 80 rupees when we had come out with the report, we look good. At these prices of which are around 50, it looks to be a fantastic buy. And also the government is looking at implementing an MIP. They're getting data from the industry. So if that kind of things are implemented, and today, if you remember, there was a strong qualification by the Narendra Modi government as to why are the railways importing steel from Japan when we have local production capacity. And rails are very high quality and high margin products. So, if you have average steel selling at about 40 to 45 rupees per kg, rail steel goes at 60 plus rupees per kg. So, there is going to be a huge windfall coming to SAIL from that. So, we are extremely bullish on SAIL. And I think that at 50 rupees, there is very, very little downside risk to wager for a long term of 5 to 7 years. Also, even if you see another fact is that to set up a steel plant, you need huge amount of capex, and none of the existing players are in position to do any capex. So I think any capex that is going to be coming out is going to come only post 23, 24, and that is the time when we will be hitting 100% capacity utilization. So I think SAIL, although it has underperformed and disappointed and we've got a few big bats, I think we'll be smiling our way to the bank in the long run.
Okay, let's wait and watch. We'll leave it at that. Thanks much for taking the time out and being with us today, giving us your thoughts. Let's start wrapping up the markets. About 1% higher. I don't think too many people anticipated this at the start because we started off well and then succumbed to some bit of profit booking. But right now, doing reasonably well for ourselves, ending almost at the highest point of the day. So this is a good day for trade. Good start to the week if you're a bull. The mid caps and the small caps too have not done too badly. So about, well, not as well as the large caps maybe, but certainly doing well for themselves too. So the market that should have been positive. We'll talk about that in a bit. Let me first talk about the large caps and see what's led to this 1% up move today. Strong gains for IT and not so bad day for banking. That's essentially the key. So TCS, Infosys, Yes Bank, IndusInd Bank, Wipro, HCL Technologies. You can't go too wrong if indeed these two sectors, which constitute almost 45 or 50% of the weightage, are in the green. What's not done well, Adani Ports, the standout stock today. Bharti Infratel down about 3%. BP, HP, and one can understand that. Why? Simply because crude prices have inched up a little bit. Some pressure on ONGC, SBI is down 1/3%. But nothing too dramatic on the losers side. But for OMCs and Adani Ports, because of the related party transaction having a very steep fall, the day certainly belonged to the gainers, more so in the IT pack. But the broader end of the spectrum had reasonably strong performers as well. Devina, maybe not as strong as the large caps, but not a bad day.
Yeah, almost 1:2 in favor of the advances for today's session as well. So the broader markets really pitched in, and you had gains coming in across the board. And specifically as a pocket, sugar did really well. And we'll come to the individual movers in just a bit. But that's how the index is done. It's obviously underperformed the larger Nifty and Sensex in today's session, but a few stocks have outdone themselves. Tech Solutions, for one, is going to be a stock that's going to be ending in double-digit gains. By the end of today, the stock's up about 14.5%. Motherson Sumi, a really strong move in today's session. By the start of the show at around 2 o'clock, it was up about 9%. Finally going to be shutting shop by about 12-odd%. GVK Power on the stake sale news has been active since last week. Once again, you add another 8-odd% to the kind of gains it's seen. Magma FinCorp, and then from the sugar pocket to Sri Lanka Sugar, Dwarikesh Sugar, Bajaj Hindustan, you name it, and you've got hefty gains in coming into all of these names individually. Rain Industries is the other one that's strong in today's session, and within the IT pack in the mid-cap space, the First Source Solutions does well, and it closes with gains of closer to about 3.5%, about 4.5%. Losers then, the ADAX stocks once again real under pressure. You've got Arcom down about 6.5%, 7%. Reliance Power, that looks weak. Jet Airways, lots of negative news flow around, and the stock's beaten down once again by about 4-odd%. Aurobindo Pharma and Network 18 in the last few dying moments of trade. These are the kind of names that you've seen amongst the bigger losers in trade. MTNL, profit taking since last week. I think Thursday was the day where it really propped up. Friday and today seems to be a profit taking session for MTNL. And Future Consumer, that one is the other one that looks weak in today's session, down about 2.5%. But that's what you've got for the market close today. Encouraging on the large caps, not bad on mid caps.
Yeah, you summed it up, and let's just quickly get the data before we get in final thoughts from our experts. The turnover should come up on your screen. Let's see if the volumes nudge the 30,000 crore mark or no on the cash market. Well, quite a steep jump in volumes as well. 31,000 in last half an hour. What, 2.5, 3,000 crores done. So that's pretty good.
Yeah, the cash market volumes have been picking up. This is expiry week, so it's interesting to see how these numbers pan out in terms of also what the rollover figures will look like, you know, starting tomorrow as we approach Thursday. But taking a look at the overall contributors in the index, and then we look at the advanced decline ratio as well. So this is what it stacks up to be. IT, like we've been highlighting, has been the key contributor. So two major heavyweights there, TCS and Infosys, contributing the bulk. And from the banking space, HDFC Bank, again another heavyweight there, 18-odd points given from HDFC Bank, and ICICI Bank contributing 6 points.
Yep, and the market will obviously look positive. Devina only highlighted 2:1 or thereabouts in favor of the advances. Nevertheless, final thoughts from our experts. Hemen, to you first. Based on what you've seen today, would you still remain circumspect about the rally?
I wouldn't be circumspect about the rally, but if you're saying about a bigger breakout about 11,000, yes, I would be circumspect. Couple of things which are in the favor of what's happening now, Neeraj. The VIX is at 15.32, so a sub 16 VIX augurs well. The Bank Nifty has been as dead as a dodo. We've started doing well, so participation from the Bank Nifty would help the Nifty to do well. Today we had 2 IT stocks doing well, but I think a narrow market, but overall things are better. The mid-cap, small caps have recovered a bit. Market breadth is improving. VIX is down. So fingers crossed, things are looking good. But is it time for a big breakout? I'd still be hesitant. Near term, things are looking better. Neeraj.
I think that's the first time I heard the phrase "dead as a dodo." Bank Nifty. All right, Sumeet, Bagadia, what's your closing thought?
Well, the thought is positive. As we said, we are expecting an upside move. Still, we feel that the index is headed higher, and from here on, we can see a move till 10,950 or 11,000 levels. Nifty, Bank Nifty, both looks good to me. We are expecting a good upside move in the next couple of days. Those who have taken long positions, they can use trailing stop losses and hold their long positions. One can go ahead and initiate fresh long positions if there is a small dip of correction from present levels in Nifty and Bank Nifty. We are expecting Nifty to touch 11,000 and Bank Nifty to touch 27,500 levels.
Okay, well, let's wait and watch. If the dead as a dodo index continues the merry move that it was on today. A good day if you're a bull, and let's see if this lasts. Gentlemen, both Sumeet as well as Hemen, thank you so much for joining us today and giving us your thoughts. Really appreciate your time. With that, it's a wrap on this edition of Countdown from Devina and me and the team that put this show together. Thank you so much for watching. Up next is the Market Wrap. Stay tuned to Bloomberg Live.
Fulfill your dreams